Enjoy 1% merchant commission when you accept Lanka Pay cards. Contact these banks today.
I think are necessary. The situation right now, we believe that there is a further tightening necessary. And that tightening has to come in several forms. And not all would be through the actions of the central bank. That's why we have done a policy interest rate hike of 100 basis points, which is one of the higher range of policy interest rate increases in the last 15 or 20 years. But nevertheless, we think that it has to be supplemented with other forms of measures which need to be taken by the government as well.
The central bank yesterday further tightened the monetary policy with new measures to ensure macroeconomic stability amidst rising shocks, both internal and external. Considering the current and expected macroeconomic developments both globally and domestically, the Monetary Board decided to increase its Standing Deposit Facility Rate (SDFR) and the Standing Lending Facility Rate (SLFR) by 100 basis points each, to 6.50% and 7.50% respectively. The Monetary Board also revised upwards the caps imposed on interest rates applicable to credit cards to 20% per annum, on pre-arranged temporary overdrafts to 18% per annum, and on pawning facilities to 12% per annum. CBSL, in a statement post-March monetary policy review, said, measures will dampen the possible build-up of underlying demand pressures in the economy, which would, in turn, help ease pressures in the external sector, thus promoting greater macroeconomic stability. It also stressed concerted efforts will need to be urgently taken by the government to complement the efforts taken by the CBSL to overcome the present economic challenges. As its economic and financial advisor, the CBSL listed 8 recommendations to the government to diligently consider. We have done a monetary policy rate hike of 100 basis points, which is one of the higher ranges of rates announced in the last 15 to 20 years. Nevertheless, we think it has to be supplemented with other forms of measures which need to be taken by the government as well, Central Bank Governor Nivad Cabral told journalists in his post-monetary policy review meeting briefing yesterday.
One is to introduce measures to discourage non-essential and non-urgent imports based on the previous recommendations made by the central bank. We still see a large amount of items which are imported into the country, which cannot be considered to be essential. And at the same time, we don't see any dearth of those items in the supermarkets either. Those items are freely available. And when it comes to certain items which are considered essential, there are shortages that we are experiencing. So that seems a dichotomy that we need to address. And we have requested the government to take certain measures to discourage some of those imports so that there would be a greater resource availability for the essential items as well. Now that could be seen as a rather unpopular move, but we have in the last year experienced and seen a large increase in our non-essential items as well. If you do an assessment of the imports of Sri Lanka, you would find that there have been ample imports of many of those items. I don't want to go into each of those items, but you will see that there are huge sums of money that have been used for the import of those items. So transferring a part of those towards more essential items, I think, is important at this time, and that is something that the central bank has recommended. The second is increasing fuel prices and electricity tariffs immediately to reflect the cost. Now, this again may be seen as an unpopular measure by the government, but nevertheless, we are calling for it because we know that you cannot go on over a long period of time unless an adjustment is made. You know, in the context of any trade, even, you will find that if there is a purchase price of 100 rupees, you cannot continue to sell at 60 rupees. You will find that it is not possible to continue business. And if that is being supported by banks, that banks also will face certain liquidity issues if you continue that. So therefore, we have earnestly asked the government to revise the fuel prices and electricity tariffs in order to ensure that there would be stability as well. Third is to incentivize foreign remittances, because we know that there are various measures being adopted by various institutions, not official institutions, but various practices are being put together by various parties to destabilize the situation. But we are asking the government to have a two-pronged attack. One is to ensure that there is a greater support as well as incentives, and at the same time cracking down on the hawala type of transactions, so that those illegal transactions are also not able to practice in the way that they have done in the past. Fourth, we have requested the government to implement certain energy conservation measures whilst accelerating the move towards renewable energy as well. Renewable energy has been spoken of for some time, and I believe it's time for us to earnestly look into those practices to see that there is a medium to longer term adjustment in the way that we generate power as well. It's very easy to say that there is a power shortage, but we have to also recognize that over the last 5 to 6 years, there has been no new power that has been included into the grid. The last major power that was added to the grid was in 2014, when the 300 megawatts of power was included at the time of the Norachole power plant the third stage. Thereafter, nothing was included, and as a result, there would be a power shortage when there is greater economic activity as well. So that's something that we need to recognize, and fast-tracking that is going to be definitely an important factor in going forward. We also want to see increasing of government revenue through suitable taxes without it being a one-off only. So it's something that we have been talking of for some time. We have recommended to the government that there should be a steady increase in certain taxes in order to ensure that there is a greater reliance on tax income and not to rely on borrowing alone. So that's something that we believe should be looked at closely, and we have recommended that as well. And we have also asked for the mobilizing of foreign financing and non-debt forex inflows. We are happy to see that there have been certain efforts being taken to encourage that, because we need to ensure that our reliance on international sovereign bonds is reduced. A point that is sometimes not appreciated sufficiently is that in the period 2015 to 2019, our international sovereign bonds total outstanding increased from 5 billion to 15 billion in a very short period of time, whilst the economy only grew from $79 billion to $84 billion. Some people don't like to write about that, and they don't want to even mention that, but that is the actual position. So when that happens, there needs to be a gradual pullback and shrink the amount of international sovereign bonds in order to ensure that we have other avenues of financing as well. That is why the government and the central bank worked towards having new inflows such as swaps, as well as government-to-government loans, as well as non-debt inflows through other means. So we are exploring that, and some have been quite fruitful, but at the same time, we need to now recognize that that is something that we need to implement over the next couple of years to ensure that the reliance on international commercial borrowings alone is reduced. Seventh, we want to see the government monetizing certain non-strategic and underutilized assets. There are quite a number of those, and those have been now listed out by the UDA, and we are hopeful that those also would be looked at closely in order to ensure that those could be monetized. And if those could be monetized by way of foreign inflows, that would be an additional bonus, and we are recommending to government that that also be looked at as a very serious option. And lastly, and the eighth, is to postpone some non-essential and non-urgent capital projects or tone down some of those so that there would be an opportunity of certain savings. And that could be done in order to ensure that there is a greater amount of savings and the amount of borrowings that we need to do could be reduced. So it's a comprehensive policy package. We are hopeful that it will have the support of the government as well as of the people. It is important that the people also appreciate that certain changes that are being made in these are to benefit them in the long term as well. Those may be seen as being tough in the short term, but in the context of a recovery, we may need to look at those also as an important part of the overall strategies that we have to implement.
For more latest news, subscribe to FTTV.